What's up?
Redid the prediction, huh?
No, it's fine. It's fine. I can just look at it right now. Right at the bat, I mean, chart looks perfect, to be honest. Um, a lot cleaner now that we don't have the previous, like the retracements and extensions that we don't need. Um, this is starting to look a lot more like my current chart. I like the extension that you have right now. Um, it's perfect, right? Kind of with this extension, it kind of shows us that the current move, or at least this trend in isolation, right, this one right here, is pretty impulsive, right? Because the move from the base is pretty heavy, right? It was 59.47 to 60.60, which is 120 points ish, right? And that's pretty insane for ES, right? Because I mean, if we look, not only is the move really large, right, 120 points, the retracement is um, not very steep either, right? And I mean, if you just take a comparison from this micro trend to the previous micro trend, right, we can kind of see here, well, we moved from 58.14 to 59.10, which is 100 points, right? But we retraced about more than half of that, right? It's probably a golden zone retracement if we go to ES. Um, yeah, it's a golden zone retracement, so it's 60% retracement. Um, well, what does that mean for the current trend? Well, what that means is, okay, if we maintain the current levels or at the current levels of support, which is probably 60-60. Yeah, if we maintain about 60-60, then we're probably going to be a pretty big impulse. Um, but let's see what he said in the statement. With the current price action, I predict that price will consolidate between 111, okay, perfect, and 81. Perfect. Yes, perfect. Amazing, right? Because we have that little um we have this tiny range here, and if price closes below 81.5, right, you would target 64. Perfect. Literally like one to one with how I would analyze price action. One to one right there. I could see price falling even lower to 59.53. 59.53. If is would that be your next price target if we close below 64? Is my question.
Yeah, I think it was, but I was kind of just like looking at it and I was like,
Okay, 53 is a little far, right?
yeah, I'm looking at that too now, but I
Hmm.
think my reasoning was that like it looks like it dumps after that level like pretty.
Let me see. Let me take a look here. Okay, so let me go to clean chart. Yes, 185. Um, let me see. Let me see. So we get this, right? It's kind of zoomed out like this. Let's get rid of this. Okay. Um, right. So looking at it like this, um, so we have 60-62-ish, and then 59.53. Then you have 60 you had here. Right. So then we replay, right? So right off the bat, right, we see that we got that trigger. Um, we closed below 60 or like this level-ish, 6084-ish, 6081, yeah. We closed below that liquidity level, pretty cleanly at that. And then our next level would be, right, 6064, which is probably around here, right? What happens? Well, we come down and then we test that. Now, ignoring what happened today, um, it's really hard to say. Like, sure that this structure is a straight line, um, relatively, right? It is very hard to ignore the price action inside of this trend, right? Because we very clearly have this range here, and you identified that range previously, right? So yes, our main price target would be like the top of the range, right? Because that is the nearest level of support. So something like so. or you would target 64, but you would also have to target like the liquidity levels and the bottom of the range here, right? We can clearly see how important the bottom of the range here is. So 46, and that is not a negligible amount on ES, right? 20 points on ES is huge. Um, so to go from 64 to 49 is a little too far, or is really far, right? Because not only do we have this level here at 43, we also have this level at 6012, right? We can kind of see here just how relevant this level is with the one, two, three, four candles out of the five, um, maintaining that level here. And I mean, if we look to the left as well, we can kind of see um, just how relevant that level here is, right? So we cannot kind of just jump from 64 to 49, especially when there is something like this. Now, let's say for example's sake, um, let's arbitrarily just imagine it was just a straight line. Like imagining what happened here um, happens here, where all right, let's apply the same premise. Like let's go all the way back. Um, let's get rid of all the levels, right? Let's say we did manage to close below 6101, right? Then you would target 65, right? It's not the same scale as the previous, um, not the same scale as the previous kind of claim you made, where you jumped from 64 to 53, 59, 53. But it would had that price action emulated this, right? Kind of move up, where we just move in a straight line and there's no ranges, there's no uh, consolidatory periods, right? Then I would say, okay, that's fine, right? Because here, the key thing here is that, sure, this is a massive move for ES where it's like 50-ish points, 40-ish points. Um, but the structure shows that we've just moved in a straight line. And if we look to the left as well, right, every time we have been in this area, we have moved literally in a straight line, like even back here, right? Moved in a straight line here, moved in a straight line here, and then here is the only time we didn't move in a straight line. So, I mean, that's besides the point, right? Because we never actually closed below. I mean, we closed below here, but we literally just move in a straight line. We can kind of see here as well, move straight line, etc. Right? Like the pattern holds true. But anyways, perfect up until the subsequent price target, right?
Yeah,
But still
I'm
good
looking
nonetheless.
at it. This it looks like I ignored a bunch of stuff because the 1618 looks kind of respected too.
Yeah, the 168 is good too, right? That kind of offers us right that wick there. It's also the it offers us the liquidity wick before it happened, right? It offers us this. Um, but anyways, right, let's see what you said for the bull side. If price goes above 111, I would target 132. Yes. Oh, you said, but also target. Sorry.
Oh, whoops, it's the same thing.
Yeah. So what did you mean on the second part there?
Um, I'm gonna say that I meant to say probably the 6164 level. It's on the same.
6164 right here. Yeah, perfect. I mean that's what I was looking for here. Right, this 64-ish area. Um, as we can see, price never really closed above 111, right? So we never had a trigger, but I would have the same price targets as you, where we have right, this small defined range here. Very, very clearly defined range here, right? Every single candlestick body is either touching the top or the bottom, or at least the wicks are. Right, and then we have the liquidity here towards that 32 area. It is also right this kind of liquidity back here, and we can also see the candlestick body here opens and closes at 32. So this would be a perfect price target. Have should we close above 111, right? If we close above 136 and kind of accept into this range here, then yes, my next target would be 61. Um, I wouldn't necessarily target I would keep the 6150 in mind, right? The top of the range here. But I wouldn't necessarily target it because the range is very, very small. Um, and the structure right outside of this range is pretty volatile, meaning um, it's just liquidity up here, right? And it's just liquidity down here, meaning there shouldn't really be that much resistance coming into the range and coming out of the range. So that's kind of why I kind of accept this 61 level instead of us targeting right this upper level of the range. But great job nonetheless. Right, you've fixed a lot of your issues um, where you had the wrong extension points and then you had the wrong, not necessarily wrong retracements on the chart, but like retracements that we didn't need. Um, so perfect. Um, bias is neutral. I mean, you got that right, right? Because we literally just ranged until we got that close under, right? The 6084 close. We came down to your first price target of 64. And then, I mean, we just maintain neutrality where we're just going sideways. Right? The true trend would have really only start until we break below 38-ish, right? Because it's below 38, we would go to your ultimate price target of 50, which is very bearish, right? And if we ever do close above 111, then it's pretty bullish, right? Um, but market is indecisive right now. The good thing is, actually, let's go to your NQ chart before I talk about the good thing. So with current price action, I predict price will consolidate between 60, so 76 and 535. So 76 and 676 and 535, which is right here. Yep. Okay, nice. If price goes below 535, I would target 374. I mean, just look at that, right? We close below and then we hit right that level that you targeted, which is 200 points, right? That would have been an insane trade, and it happened in a literal instant, right? In a single candle. Um, could also see price falling even lower to 248. 248 is here. 248 is here. Yeah, I like this target. I was gonna say like maybe we could lower it a little bit, but I think 248 is pretty good. The reason why I say here is because kind of include this wick here, right? This is the lower wick of whatever range this is, like this tiny, tiny range. Um, right, it's the lower liquidity, and then it also has these, it catches these two candlestick bodies here. Um, but I think the 20-point difference is not too necessary, right? Because we will always have some room for error, right? As we're approaching price targets, we just set a trailing, um, and if we wick the target, great. But always leave room for error, right? Um, but right, let's see the bull side. If price goes above 76, I would target 785, 76, 676. Yeah, 676, 785. 785 is here. There's liquidity here. Okay. Now one thing I wanted to add is I think at least for the price target for bulls, when we analyze this range back here, right? Um, we have the top and the bottom here between 676, right, and 541. Now, here is where I would kind of say we have two liquidity levels to the upside. One is here at 724, right, because we have these two candlestick bodies, but we also have these two wicks here, right, escaping the range and then coming back in, hence the liquidity level. But we would also have, right, the upper liquidity level of 780-ish. Um, and because we have these two candlestick bodies here, and because we have these two wicks here, this kind of takes precedence before um, 779-ish, 780-ish, because right, there's just more significance here in terms of time. Um, so I think while the 784 level is correct, I do think we have a um, little level before that at 726, right? Just because of this range here. Uh, bias is bullish. Um, I think because we're hitting a lot of headwind here. Hmm. I think because we are inside of this range, right? And I mean, we have these retracements and extension levels kind of gating us. Uh, we shouldn't necessarily say we're bullish, right? And typically, um, if you see ES neutral, um, and you're pretty confident in that, then usually that means NQ is neutral as well, right? One doesn't usually run before the other, or like one runs without the other. Uh, it does happen sometimes, right? But we whole trading is whole trading strategy is based off of patterns, right? So we shouldn't look towards outliers. But because we're still in this range here that was so clearly defined back in January 17th, um, probably just assume that the same thing is going to happen here as long as we don't close above or below these two liquidity levels, right? Um, I think for us to kind of claim that we're either bullish or bearish, we would have to really break and close above these two liquidity levels being 780-ish and then 377. But that doesn't mean we can't play inside of this level here, right? Because I mean, this range is pretty huge, and the range is so cleanly played as well. I mean, I've been just playing it every time we close above 550, we just target that 680-ish area. And that has happened three times now, right? Well, third one is coming, right? But it happened here, right? It happened here. And then we are looking towards it happening here as well. This one is a little bit different where we don't necessarily come up from the lows, right? But we just close above and hold support. So it's different, but that's all that means is just we're still holding the range. So in theory, we should test the top of the range here at 678. Something else I kind of wanted to point out was, right, we have this extension here, we have this extension here. Great. I think we can also have this extension, right, uh, from this low to this high, right, and then to this low. Now, the reason why I have this extension is because um, this is our micro trend here, right? Where does the consolidation begin? Where does it end? Well, it begins here and it ends here, right? Because clearly we move sideways for a few days after moving 700 points off of the low, right? We have this move up, 630 points off the low, right? Where does that move up continue again? Well, it happens right here at 274. So I think we could also include this extension. Um, I think I did kind of want you to see that because it does, um, what's it called? It does emulate the principles that I kind of taught you in our first sessions, where we move from bottom of trend, end of trend to the beginning of the trend again, right? Um, and this is one of the kind of more unique consolidation patterns where uh, we have the middle of the consolidation, right? The middle of the consolidation here being a little bit higher than the previous trend's high, right? Now there is a name for that pattern, but not necessary to learn it yet. We will jump into the funded trading first before I kind of dive into Elliott wave principles. But I did want to say, great job. It was I keep seeing massive improvement from you in terms of your learning. Um, Pretty much every statement you've made was correct initially, right? The only issue we had was jumping from 64 to 59.53, but you already caught yourself right when I kind of went over it. Um, But anyways, like great job. Um, this is good. Right, we have one more day left of the month. So if you can make another correct prediction for ESNNQ for tomorrow, then I think we should be good to go with starting with the funded, and then we can kind of trade together. And the goal is for us to analyze ESNNQ on the previous day, right? So we can use that information, we can use that analysis with our trades for tomorrow or for the next day. Um, I think that is a good stopping point. I do have a couple more charts for you tonight. Can, on top of the ESNNQ, I might just give it to you tomorrow, um, because it is coming over to the weekend, right? So, uh, but yeah, great job, great job.
Sure, when you're playing the range like how it is right now,
Mhm.
either side, like what would be your stop loss? Just a close under the.
Yeah, exactly. I
Okay.
close underneath. Um, right. So I think that a good example here is on this play here when we had that 550 area. Uh, if we move a little more, oh, oops, uh, going back here. If we just look at this candle, then we can kind of see here, we do kind of push below the range here by 20-ish points, right? But th what we're looking for a stop loss is just a close underneath the range. So any close underneath this 530-ish area would be your stop loss. Um, but I mean, as the pattern has shown, pretty much every time we've closed above that 550 level, we have come up to test at least 678, or at least right 628, right, which is these two wicks here, right, about like 600-ish. And so that would be your stop loss. If you're taking it from the other side, right, where you're taking a short from 678 down to that, um, like looking at the previous pattern, I mean, every single time we've rejected that 678 level, we've come down to at least 533. So I mean, my stop would just be any close above, right? You could even do, if you're willing to accept more risk, um, right, then you could do any stop below, any close above, sorry, this liquidity level at 720-ish, right? But that obviously reduces your risk to reward, but it does allow you for more room for error, right? Now, do I play every range? No. Um, Simply because some ranges are just too small, right? Sometimes the risk to reward is not great. Right? So, for example, like if I was playing, I don't know, like this range here, right? Like this range to me is not that enticing. Um, but this, right, where there's such a clear pattern, I would take it. Sound good?
Yep.
All right, I'm going to end the recording here. Um, I'll see you tomorrow.
All right.